Hello everyone, we are from Group 1 consisting of me, Abigail Elsa Samita Istakar, and my two partners, Bait Putra Kristanto and Monica M. Damani. So we are here to explain you about tax bookkeeping or recording and audit. So the first section will be explained by me. The rule about the tax bookkeeping already written in Pasal 28 ayat 1 Undang-Undang KUP. It says that individual taxpayers who carry out business activities or independent work and corporate taxpayers in Indonesia are obliged to keep books. So, what is bookkeeping? As it has written in Pasal 1 huruf 5 Undang-Undang KUP, bookkeeping is a process of recording regularly carried out to collect data and information covering the state of assets, liabilities or capital debt, income and cost, as well as the total acquisition price and delivery of goods or services that are owed or not owed VAT, subject to VAT with value 0% and those subject to sales tax on luxury goods, which are closed by preparing a financial report in the form of a balance sheet and profit and loss calculation for each fiscal year ended. And next, here are 3 bookkeeping obligations. The first one is individual and corporate taxpayers who have business are required to keep books of account. The second one, those who do not have a business use the recording of the gross circulation of their income receipts. And the third one, calculate the income with the net income calculation known. Tax bookkeeping should be due to observance of good intention and reflecting actual conditions or business activities. And the second one, it should be held in Indonesia using Latin letters and Arabic numerals, using rupiah and foreign currency units as permitted by the Minister of Finance. Should be compiled in Indonesia or permitted foreign language by the Minister of Finance and is carried out on an accrual or cash basis. Here are some rules about the bookkeeping in foreign language and in a currency other than rupiah, and usually it is in dollar and English. So the first rule is taxpayer in the context of foreign investment operating under the provisions of foreign investment laws and regulations. The second one is taxpayers in the framework of operation contracts of work and contracts with the Indonesian government other than oil and gas mining. The third one, obliged to invite corporation contractors operating under the provisions of the oil and gas mining laws. And then permanent establishment as stipulated in the related Double Tax Avoidance Agreement or P3B, P3B, and Collective Investment Contract or KIK, which issue mutual funds denominated in dollars. The last one is taxpayers are directly affiliated with the parent company abroad. And here I will also explain you about the exchange rate in bookkeeping. So in bookkeeping, for the acquisition cost of tangible or intangible assets that have a useful life of more than 1 year using the initial exchange rate. For accumulation and or amortization using the actual exchange rate at the time the assets were acquired. For other prices and the obligations to use the actual exchange rate at the end of the previous financial year based on the bookkeeping system adhered to and adhering to the principles. In the event of the evaluation of fixed assets, instead of using historical value, the exchange rate used is valid at the time of the evaluations. For retained profit and remaining loss in dollars, using the exchange rate at the end of the previous financial year, namely the BI middle rate. And for share capital and other equity using the actual exchange rate prevailing at the time the transaction was made. So I think that's all I can explain about you. The next presentation will be presented by my partner.
Hello everyone, let us continue our discussion today. So here I am Monica M. Damanik, will explain you about Indonesian tax recording concept. So actually in this topic there are only 3 points that you have to understand. The first is about the definition of recording, and the second is about the requirement that we need to do recording, and the last is how to make a form of recording. So let's start. Okay, at the first, let me tell you about the definition of recording. So, based on Article 28, Paragraph 9, recording consists of data collected regularly on gross revenue and gross income as a basis for calculating the amount of tax payable, including income that is not taxable or imposed to final tax. So, if we compare it with the definition of bookkeeping that have already explained by Abigail before, so we can conclude that recording and bookkeeping are slightly different. Well, let us continue our topic. Now I will explain you about the requirement to do a recording. There are 3 requirements here. So the first is recording must be carried out in an orderly manner and reflect the actual situation. It means that we are prohibited to do a manipulation. And then the recording has to use Latin letters, Arabic numerals, units of the rupiah currency, and compiled in Indonesian language. And then the second is the records for 1 year must be kept chronologically. It means that all the things have been recorded based on the time when it happened. And the last is records should describe first gross revenue of circulation and total gross income received or earned. And then records should describe income that is not a tax object and income which tax imposition is final. It means that we have to make a complete tax recording. Okay, now we will discuss about recording format according to the regulation of the Director General of Taxes. So I hope all of you will listen to this topic carefully. Here I show you the recording format of income that received from business activities and free work, which are tax objects that are not imposed to final tax. So in the first column, we need to fill it with the gross distribution and revenue debt. And then in the second column, just fill it with the description of the gross distribution and revenue. For example, the sale of written batik, acceptance of patient medication, and so on. And for the third column, just fill it with the gross amount, such as rupiah value of circulation and revenue after there is deducting the discount. And for the last column, we just need to fill it with information that we think necessary. And then here is the format that we need to make a recording of income that received from outside of business activities and free work, which is a tax object that is not subject to final tax or other income. So in the first column, just fill with the date of receipt of other income. And in the second column, we just need to fill it with a description of other income, for example, interest, dividend or share of profit, royalties, rent, grant, and so on. And for the column 3, fill with the gross amount of other income. And in the next column, in column 4, we just need to fill it with the gross cost related to other income. And in the 5th column, just fill it with the net other income. And for the last column, we just need to fill it with information, for example, final tax and other information that necessary. Well, here is the third form of recording of gross income received by individual taxpayer that who are not conducting a business activity or independent work. Okay, in the first column, we need to fill it with the date of receipt of gross income. And in column 2, filled with the name, and NPWP of the employer or income provider. In the column 3, filled with the gross income, and then in the column 4, filled with a deduction from gross income. And next, in the column 5, we just need to fill it with the net income. And for the last column, we just need to fill with a description of the source of gross income. For example, salaries, wages, allowance, and so on. Okay, the next is format for recording income that is not a tax object or income whose tax imposition is final. So this format is separated by two. The first is recording of income that is not a tax object. In the column 1, we need to fill it with the date of receipt of gross circulation and revenue and gross income. And for the second column, just filled with a description of the source and types of income that are not subject to tax. For example, is assistance or donation or grants and etc. And then in the third column, we need to fill it with the amount of gross circulation and revenue or gross income. And for the last column, we just need to fill it with information that necessary. Okay, here is the last form. So this form is for recording of income with final tax imposition. So instruction to fill this form is the first. In the column 1, we just need to fill with the date when gross income is received. And then in the column 2, fill with a description of the source and type of income that is subject to final tax. For example, deposit interest, saving, SBI discount, sale of shares on the stock exchange, lottery prize, and building, and so on. And then the column 3, we need to fill it with the amount of the tax base or gross income. And column 4, filled with the final income tax that has been deducted. And the last column, we just need to fill it with information that necessary. Well, that's all material that I can explain for all of you. The next topic will be explained by my friend. Thank you.
So now we are going to talk about a special condition for tax bookkeeping. Now based on Pasal 28 Ayat 2 UU KUP, it simply says that individual taxpayers are not necessary to make bookkeeping. Now the local tax authorities make this regulation because they realize that making a bookkeeping is not an easy process. Therefore, they wanted to make it easy for everyone to inform their tax into the local authorities. Now, who are these individuals actually? It is for business owner who chose to calculate his net income based on the norm of calculating net income. Now, before that we dive deep into that, business or a taxpayer must inform the tax authorities that he is using the norm of calculating net income before the year of the tax incurred, or no longer than 3 months after the first month of the tax year. Now, what is exactly is a norm of calculating net income? So it is the norm or the regulation that every business who has a gross income less than 4.8 billion rupiah. Now we are talking about bookkeeping principles. Now every accounting process need a principles, and it is the same for bookkeeping for taxation. Now using the same Pasal 28 but with a different Ayat 4 UU KUP, every bookkeeping process must obey the bookkeeping principles, which is bookkeeping consistencies. Like I said before, every accounting process must be consistent all the time. Now, what kind of consistencies? Quite mouthful to say. Now, the first one is that taxpayers are not allowed to change his or her bookkeeping method Now, as we know that accounting has a lot of bookkeeping methods, and the taxpayer are not allowed to change his or her method at all time. Now, for an example, a business owner uses an accrual method, then he or she must use that accrual method all the time. Because, well, if he or she changes the method from accrual to cash basis, imagine how chaotic the report will be. It will be not consistent and it will not be useful. And then it has to be consistent in the tax year. It must use the same tax year date all the time. For example, Company A uses tax year from 1 January to 31st January 1980. Therefore, the company next year must use the same date. It has to be start from 1 January 1981 and it must be ended at 31st December 1981. Also happen if the company start it at any months of the year, it has to be counted within 12 months. And then a bookkeeping must be consistent within inventories calculation method. And yes, you know there's a lot of method, but in this bookkeeping themselves must use the average or FIFO only. And also the value of the inventory must be based on its value upon its purchase. Now for depreciation and amortizations, it has to be consistent as well. Building depreciation can only use straight line, while non-building assets such as equipment may use straight line or declining method. And if somehow the taxpayer insists to change for any number of reasons, then the taxpayer must report his or her intention to change to the tax authorities before the tax year started. Sorry for the noise. Now, taxpayer may only change his or her bookkeeping method if the tax authorities give an approval based on the taxpayer's reason. Now, the procedures to change the method. The first one, taxpayer must ask for a change of bookkeeping from the local authorities while mentioning the taxpayer ID, the changes that he wanted to change, and also the reasons on why he wanted to make such a change. And then he or she must prepare a copy of SPT, and then also taxpayer written declaration that such changes are based on the desire of stakeholders and stockholders, not because the business are having some losses. And also a written declaration that they will not change the method anywhere near the future, and also a declaration that such changes are not meant to decrease the amount of tax they owe. You know, evil thing. And that is the end of bookkeeping for Indonesian taxation.